Today we have somebody very special. Somebody I call the angry young man. 2009 Marwadi father giving 2 crores to son to invest.
By the way, ये एपिसोड मारवाड़ी का इसलिए बिकॉज दो मारवाड़ी बात कर रहे हैं. एक के पास पैसा है, दूसरा अग्रवाल है. आत्मा में जाके देखने वाली बात. The founder is gone, run away from the stock to the farthest and not even go touch and look at the price. 10 लाख रुपए में वो सीखा है मैंने. So that's what his finance is all about. My first hiring was my office boy and I had to ask him कि मेरे को सर बोलना है अभी आपको.
First time he walked in, I think for 30 minutes he just expressed everything that is wrong with the Indian ecosystem, and then after that it became a habit for everybody to wait for Abhishek to show up.
You should call me visionary. I just saw that 10 years ago.
Is there something you would recommend to other next gen?
Sorry, the one hard learning I learned कि यार advice नहीं देने की किसी को. Indians are full of motion and everybody is going to give you the right advice at right time every day.
Right advice,
So,
right time, every day.
As we say, हर धंधे का एक वसूल है कि वो वसूल फॉलो होना चाहिए वरना धंधा नहीं बचेगा.
Correct.
आप धंधा कैसे भी कर सकते हैं.
Hello and welcome to episode 54 of Damani Talks. And today we have somebody very special. Somebody I call the angry young man of the Indian startup ecosystem. We got connected actually very randomly and then found so many common connections in between. I used to run a group called the Young Funders Group. Right? And it was basically anybody below the age of 45, minimum 10 investments. And we used to meet once every month and just discuss and share stories on Indian ecosystem. After I think 6 or 7 meetings, Abhishek, you joined.
Yeah, I was not aware of that. That 6-7 meetings happened, but yes.
But through a reference joined, and the first time he walked in, I think for 30 minutes, he just expressed everything that is wrong with the Indian ecosystem. And then after that, it became a habit for everybody to wait for Abhishek to show up.
You should call me visionary. I just saw that long time back, 10 years ago.
So without further ado, let me introduce our next guest, Abhishek Agarwal of Rockstud Capital. Abhishek, welcome. How are you feeling today?
First of all, thank you so much, Anirudh, for getting me here. And amazing, 54, 55 episodes is not easy. I'm pretty sure you're doing a great job here. I'm feeling great.
The viewers feel the same.
No, feeling great. Thank you so much for inviting me. And yeah, there.
So I like talking to Abhishek, and we had Mohit earlier, they speak their mind, and that's where real learning happens. And very interesting, Abhishek, you and I have we have maybe convergent views on many things and divergent views on also as many things, right? So when it comes to common investments, Everest Fleet and Granules, we both agreed on, and so many other ones we have disagreed on. But we both made money where we agreed. Yes. So it's always good to call you up and say, hey, what do you think? And understand.
No, true. Absolutely true.
But you've had a very interesting journey. Yeah. And I really like the journey you've had to your career, and we'll come to, what you're doing today and how you sort of got here. HR college, right? After that, Lancaster. And you came back, and I thought it was a very interesting thing that you did. You didn't join the family business starting out, right? Because you have a family business in the finance space also, and there's a listed company in the family. But you joined a company called Pioneer Invest Corp, right? And as a research analyst, why after completing, usual Marwadi thing would have been you finished, you become MBA, get married, take over the family business. You decide to become a research analyst, which in 2008 and 9 was not as glamorous as we are claiming it to be today. So what was the reason to go outside the family realm and start something at a really junior level at another place?
So I'll give you the rationale. So Anirudh, I mean, I hope nobody watches this episode. And especially for those startup founders who wish to see the real VC founders who are running this show, they should actually avoid, because for them there's a lot of masala. So in all honesty, I finished my post-graduation back in 2007 end. And that was in UK. And the early signs of, the famous meltdown, as we remember the financial crisis, the subprime.
Yeah.
That actually happened somewhere in September 2008. But it was just not a volcano which just erupted overnight. It was indeed something was already there in the making for very, very number of years.
Something was simmering for sure.
Yes. And no, that's for like really long time. It was has happened accidentally. And I was in London category. I remember I was trying to, find something for myself after finishing my part of education to find a job. and of course in the financial market, and things were not looking that rosy at all. Indeed, there were very large names, large banks who actually had to shut down their operations in London. So, I, in that vision that probably now I have to go back to India, it was a forced exit, if you have to use that terminology from there. And when I came back, of course, typically in Marwadi, we understand our parents do play a very, very pivotal role for our upbringing and our well-being. And in that, my father was being, he was a professional, and he was very clear that I should not just get rosy bed to lie. So it was very clear that you have to go through the grind.
That's amazing.
And that's where the part came, that I have to actually work under somebody and professionally, and get a proper salary, get a check. So that's the reason I had to choose a job. And it was again a forced
entry this time.
Forced entry that you have to get into this part. But I think so that really played a good part, since I was able to see that Meltdown episode in front of my eyes while I was in work. And I was there for 2 years. And then I realized that, okay, ab ho gaya. Now let's get back to...
Ghar aaja Pardesi. But that getting said, it was a very interesting time not to be in a family business, because you obviously got to see this role at Pioneer Invest Corp. You must have seen the meltdowns, and it was massive write-offs. Even if you remember, Sensex fell some 60-70% in that period, and you must have realized people getting fired, all kinds of panic everywhere. And that was your first initiation to investing.
So I'll tell you, I mean, when I joined, I clearly remember, I think so, I entered somewhere in December 2007. That's where I started. And you have those MBA batches which joins in the later part. So maybe Feb or March 2008, I saw some of my new friends joining the cap table. And I remember that particular place where I was working, in the surrounding, this lovely office, I was having a research team around with me, around 40 people, 45 people. That's one of the biggest. And the company was already had a DI and FI as a client. So it was already institutional setup. My parents wanted to make me work in an institutional setup so that I get to learn that. And you are right that those times it was not that very sexy to just get into your research part or, get entry into something like that. But I managed through because of the background. But then, come October, November crisis, by the time December, same year, I saw more than 60% of the team getting fired in a single day. And I was just sitting here and besides, how you are sitting, one of my friends just got fired. And that was a tough reality of really, seeing things that if things doesn't go right, the sunset can really be faster than any of our imagination. And I took that learning very hard, that you have to do all of things to survive. And luckily, I was not the person who got fired. Maybe because my paycheck, what you can say, was the lowest that point of time. They got me for free, maybe. And I was retained. So that's the reason I continued my journey in that period. And because I said I worked for 2 years, and then entire meltdown, and then little bit of settle down, whatever we can say, I was able to see that what happens. After that, yes. So that was a good learning piece.
So, and before we move into the next piece of your journey, I just want to ask, is there something now you would recommend? See, the world has come a long way. Today, family office is a name. There was nothing called family office at the time. Today, next gen is a name. Nothing was called next gen at the time. And many of the people that are listening are family offices, right, today. And so is there something you would recommend to other next gen today? There are, let's say, graduating from a Lancaster, they're graduating from the US, and they're coming back. That would you recommend that they first go outside the family, get some experience there, and then enter the family business? What would your recommendation be?
So, the one hard learning, I just, in the very, very recent time, I learned कि यार advice नहीं देने की किसी को. Indians are full of, emotion and free of advices. And sometimes क्या होता है कि you are not, upbringing is not unlike Western world where, they leave it to you and then you figure it out and there is your accountability. Nobody else is going to question you that how are you running your show. Here, everybody is going to give you the right advice at right time every day.
Right advice, right time every day.
So we don't know. If you have to ask me in my own judgment, looking at the new generation, I think so they are really smart. and they know what to pick up and how to run their journey. So I don't think so anybody's advice is relevant. Like we both work in startup ecosystem. This year, what sector works, it is not something which will work the next year.
Very true.
So pretty much, I think so there's no standard model to life. We all are coming from a very, very different diversified background. But certain things, as we say, हर धंधे का एक वसूल है.
Correct.
कि वो वसूल फॉलो होना चाहिए, वरना धंधा नहीं बचेगा.
Correct.
आप धंधा कैसे भी कर सकते हैं. So I think so there are certain things you have to go through the grind irrespective of your bank balance. You need to have a right head on your shoulder, and that
Correct.
can only possible if you have done the right journey in that hemisphere, how everybody goes through.
Correct.
So you have to go through a little bit of toughness. You need to come out from your comfort zone, and you need to see things independently. To really see life, because when as I mentioned that one of my colleague or friend just got fired overnight, and that was something I was not prepared for. So then can you control something like that when you are running a company at your level? You might have some tough choices to make, and you won't be unless you have not.
Especially in finance, right? You have these.
I think so. People think finance is the very, very easy or very lenient job. But according to me, it is the toughest.
Correct.
Because the way you can go up at the same speed, it's a 2x velocity, you can come down. So people don't understand the downward velocity as much as they appreciate the onward journey.
And then there is no break there.
Yes, there's no break. There is no break. So yeah.
And then you entered Fortune Interfinance,
Yeah.
right? You were there for almost a 7-year period.
Yeah.
And I think you must have completed something at Pioneer saying, okay, now I'm ready to enter the family realm. And one of the key things you did over there is you borrowed money from your father I think what I remember is, and we've talked about this, I think you borrowed about 2 crores to start investing, which by the way, today sounds like a very small amount. 2009, Marwadi father giving 2 crores to son to invest. It's unheard of, right? It will almost be equal to 30-40 crores today if you just count in pure apples to apples comparison. What was that feeling like, that responsibility? Now you've got 2 crores and what was the strategy that you were trying to go after?
So I took funds around 2013-14.
Achha.
And after completing Pioneer, I joined my family business. That is what the Fortune Interfinance Limited, the name came. And my uncle is the promoter for that company, which he's running from Calcutta. And since I completed my journey as analyst, I thought, now I have learned it, man. I know the Excel model, and on Excel, I can just forecast anything on the planet. You just tell me what needs to be forecasted. I'll make a business model and it will work because the entire world is on my command.
Yeah.
So that kind of overconfidence was the reason why I joined my family business. And that was nothing because it was going on. I thought probably I wanted to do something more and a little bit of research, what I learned. I think so it was good enough for me to start. In the hindsight, I think I was too early and too foolish and full of overconfidence. But yeah, I took that plunge. And I set up the entire Bombay operation. Achha. So that's what I did.
Where was the office?
It was, so my dad actually was also visionary. He actually took a small space at Masjid Bandar, which was, just near to Nariman Point, but it is not that near. And it was mainly the metal market, Lohe ka market, which my father has worked
Achha.
with Brothers of Lakshmi Mittal in India. So he thought probably if I have to join steel business, then I should also have office with him. So that's where he just got me a small space and that's where I started. It was a very humble beginning. There's no fancy thing. My first hiring was my office boy. Achha. And I had to ask him, कि मेरे को सर बोलना है अभी आपको. So you can imagine that, starting young is, there are some blessings, but in that blessings, things also come with its own weight of, hard learnings. And it was not easy because, you can hire people to call yourself as a boss. But to recognize yourself as a boss, you really need to do those things
the
which gets you the respect.
Position.
Yeah, it can't. It never. I think so. It is nothing like Western thing. I think so. It's a concept of everywhere. So that's remained true. And I started. My focus was to get the clients largely from the PSU banks to trade with me. Achha. And in return, I'm giving them the ideas. So every PSU or private bank have their treasury department. And the treasury would run a very large book in terms of deploying in different asset classes, including equities.
Achha.
So they, of course, do trades. And then you have brokers.
So you're trying to build like an institutional book of business.
Correct.
Okay.
Idea was that I give them ideas and they are trading. So again, it was a broking business. But then here we are talking about volumes. My traditional business was more catering to the HNI and prop capital. So I wanted to build institution. That was a mindset right from there that I wanted to build. And in the journey of few years, I, of course, met a lot of good people around. fund managers from different mutual funds, because I was also doing mutual fund distribution business. Back in 2013, I categorically remember my AUM at that point of time in mutual fund distribution alone was 350 crores.
Wow.
And nobody knows I never quote this. The first time I'm telling. So, and
and this is when you actually make money as mutual fund distributor.
Yeah. I mean, what we see today and the kind of environment, what people think in the last 4-5 years, 2013-14 was very different. Things were not that systematic. And again, it was relationship oriented. So I think so that's what it counted then. And got the AUM fast because I got few corporate clients who was okay to, build that AUM with me in terms of, but I just, again, I realized that whether it was institutional broking, which I was doing for the PSU banks, or running my mutual fund distribution business for the corporates, the hard learning was I was not able to see myself that what value am I adding there.
Correct.
And you are talking about 5 bips, 10 bips. It was not that exciting. Now it's very fancy to talk about, your AUM and all that jargon. I mean, I never got carried away by that part. I mean, I am very particular about carry, but not getting carried away by just numbers. And carry only triggers.
This episode has some one-liners that are just going to be on t-shirts in the future.
So see the carry income only triggers once you return the capital back.
That's true.
So I never believed that if you have enormous money with you, do you automatically get the license to return back the money in that same capacity. So I was very particular about building it right way, but at the same time knowing the realities around me. So the 5-10 paisa business was not making sense to me. And that's why 2014 I decided कि दोनों नहीं करूँगा. And my father, of course, was in a shock because ये अब क्या कर रहे हो? मतलब, now you don't want to do this. What you are going to do?
After 3-4 years of building that.
Yeah. It was very hard. It was very hard to take that call because I just could see that Zerodha started in 2012. I could see Flipkart coming in India. And today it is very easy to go back and just imagine, अरे वो तो मुझे पता चल गया था. नहीं, मुझे ऐसे नहीं पता चला था. The UK is far ahead as far as their startup ecosystem, unlike US also in the same way. So since I was there in UK, that exposure really got me that understanding that what actually the app uses means.
Correct.
So I used all those stuff while searching a house in London. I had used then an app.
2007, 8 you're talking about.
6. So, you can just imagine that time in India, there was nothing. So when I came back, that really helped me, that understanding. And I just could see that things would evolve faster than what we can imagine. And therefore, there is no point of being into a low margin business.
Makes sense.
So that's where I understood margin kya hoti hai. And you just can't build a business on air. If today you have 400 crore AUM, how fast can that money go out of your pocket? I was just making that calculation. I just understood that it's just a matter of click. That's what finance is all about, right? Aaj hai, kal nahi hai. So that's where I took a call that I would like to pursue my interest in startups. And 2014 is where that interest really, got jumped. The first seed was put. And for that, I required my father's support. So that's where I took the capital. But my father was also smart. He said कि बेटा मुझे तो पता नहीं है तुम्हारा startup चलेगा कि नहीं चलेगा. Again, he was also visionary.
All Marwadi fathers are visionaries. Let's just make that clear.
Please note all of them. So of course, then the condition was that you take this money. I think so you're doing well in listed equities. You understand that place because you started now 2008.
But were you also making individual bets in listed equities?
I was doing that. Doing that.
Do you remember your first investment you made?
I really don't remember that very, very categorically, considering that it was not like one, but I actually had a bucket of many names. But क्या होता है ना कि मारवाड़ी में एक चीज़ और होती है. By the way, ये एपिसोड मारवाड़ी का इसलिए बिकॉज 2 मारवाड़ी बात कर रहे हैं. एक के पास पैसा है, दूसरा अग्रवाल है. So you can imagine that where the conversation can head.
By the way, I'm not going to qualify who is who.
But see, the point is, value conscious, money conscious, capital conscious, we are so conscious. Right. So in that audacity, it was very clear that you have to build it right way. So investment करना है. But जब जाता है ना पैसा, वो ज़्यादा याद रहता है. So if you ask me, I remember where I lost money more than where I made money. So,
let's talk about that. Chalo. Which was the first one you lost?
I would not take the name because that company is still listed.
Oh, really? Okay.
It is still there. So I don't want to put bad name against that because today I probably, I'm in that position probably to name them, but I don't want to. But I remember how much I lost. I almost lost about 10 lakh rupees. Wow. In a single trade. And I lost that in 2008 Meltdown.
Achha.
And I lost that amount in a single day.
Single day? Wow.
And I was just praying that today should not be my last day of my life because I have to
10
go
lakhs
back.
in 2008 is a
Yeah,
lot.
yeah. Single day trade.
Single day.
Single day trade.
Today's, we could say a crore worth.
Yeah.
15 years.
Yeah, single day. And the founder actually, without taking names, the founder itself openly came to admit that they have done financial fraud or something, and accordingly the market reacted and the stock actually corrected 80% in the single day.
Yeah.
And probably I
think
missed.
it was 99% at one point. The closing rate was 80%, but I was in the office that day and I watched it happen.
So what happened, I probably missed that information while looking at the price, which was just correcting, and I thought I should be opportunistic because why something would happen like this, and it was unprecedented. Indeed, it was probably the first time Indian history has ever seen a stock correcting in a single day with that velocity. In US, it was quite common, but there was a circuit
breakers came after that actually.
Yes,
because the 99% correction.
Correct. So that was the first episode. I took that thought, probably that point of hindsight, that in a single day, if you have that kind of correction, it will bounce back. And that was another part of the learning कि founder क्या होता है.
Correct.
और founder की value क्या होती है market में. When the founder is gone, you have to run away from the stock to the farthest and not even go touch and look at the price. Right? So that was a hard learning. 10 lakh रुपए में वो सीखा मैंने.
I very interestingly, in one of the WhatsApp groups, I read someone say it very correctly. More people have been cut trying to catch falling knives.
It's true. Absolutely true.
Right? So if the stock is falling and something is wrong, get out. Do not try to catch the bottom.
Yes. Absolutely true. Because ultimately, what do you know would be far less than a promoter knows.
Correct.
Right? And you should never try to outsmart the promoter. That's even that thesis I follow today. Irrespective whatever money I'm managing at my level, I always trust one thing, that the founder is intelligent than me and it can go both the sides. Right? So do dhari talwar. So theek hai, that's the risk we take.
And so you started your angel investment journey in 2014.
Yeah, correct.
Do you remember the first investment you made as an angel?
That I remember because that was a very hard way again. It took me about 8 months before I made up my mind of investing startups. See, listed equity में आते हैं ना, तो balance sheet है, P&L है, cash flow है, क्या है? यहाँ है कुछ नहीं है. So how do you bridge your mind? Right? कि यार कहाँ पे क्या देख रहा हूँ मैं? And I had to hear probably 20, 30, 40, I don't know how many pitches before I actually understood कि boss, you have learned, you have to unlearn, you have to relearn. Right? So that's the code which you have to get into your head.
And startup mein, you have to do that every 3-4 years. Learn to unlearn.
Anirudh, in the current circumstances, I think so we have to do it every year now. Everything is going faster, right? The AI is taking, the curve faster than us. But yes, I mean, that's what I did. So Quench Library Solutions, that's the name. I got my first check written through the platform, which was Indian Angel Network. That's where I began my first check and first journey. And of course, that, pehla pyar, pehla lakh, pehli investment, to chali wo. So that was a good thing. I mean,
I think it was a 5x exit for you.
Yeah, I managed to have that 5x in matter of 4 years.
Wow.
So that was a good outcome. I would consider as a first, learning. And that's where, I mean, when I invested, I realized that, because of, some experience helps you.
Correct.
Right? 2008 till 14, I was in public markets and would have don't know how many con calls or how many investments ideas I would have myself evaluated or had a research coverage. So the knack of understanding the behavior pattern of a person, especially losing the 10 lakh rupees back then.
Right.
So I remembered कि अब देखना क्या है. So that is one of the reason I would consider that I would not say I am highly successful in this business, but certainly relatively much better than probably my counterparties. And that's only because you have that legacy with you to understand the founder in that way. And that helped me in the first 2 investments of mine, which has recovered my entire invested capital till date, whatever I've done.
But it's very interesting, 2014, because, I was very much in a similar case as yours, right? Also coming from a stockbroking family and trying to convince them that startup is the next thing to do. And for me, the only one word was there. The unlisted में सिर्फ scam होते हैं, पैसे नहीं बनते. Right? And I'm sure you felt that. But you were actually a trader. I was not a trader. I came from the US. So I was not actually a trader to go. I knew any idea of Indian market, right? But you did. And then I'm sure you heard 10,000 more types of advice than I did. Right? Because I only had 1 frame or 2 frames of advice, my dad and my uncle, right? And nobody else. But for you to go from public market, and all this respect of a public market, suit, boot, etc., to going straight, I am going to go after companies that have zero history.
Correct.
Right? And I'm going to do that. What you must have had some vision to do that, because today all public market investors are now in private stocks. I don't think anybody is not there. But at that time, it was a very rare thing. And quite honestly, unlisted stock was considered to be a scam.
Yeah, correct.
Right? I'll make that clear.
Absolutely.
If somebody said, I do unlisted, matlab, ye to scamster, isko to nikalo yahan se.
Yes.
Right?
Impression.
But you obviously, that was the impression, right? Because scam hi hote the uske andar, right?
Yes.
Grey market and all that used to be called. Today, very different. But, to have that vision to do that 10 years ago, what was really that you thought was going to happen that you made that kind of a choice?
That was very clear. I'll be coming in this show. So I have to do something.
You heard it.
So, but jokes apart, 2014, see, the point was, during my listed equity period of that point, I was not able to get through meetings with the listed equity founders because of the check size. So I realized that whatever I invest in listed equities, my check size is still not that big enough. How the institutions are. And they have a better access of understanding about the business because of the direct access to the founders.
Got it.
So my hunch was that I wanted to get into an ecosystem where I'm able to interact with the founders directly and learn from them about the new technologies or new emerging stuff. Because बाकी सारे तो outdated है, वो तो सभी कुछ पता है. So I was not also inclined to do something traditional. Right? I was already doing traditional stuff. And I took that call that probably it won't survive that today. Right? So something has to be learned. And either, I don't come from that tech background. So for me, it was not a choice to, start a tech company. But obvious then the next point is that मुझे तो यही आता है, investment करना. तो investment से सीखेंगे. And अब की बार थोड़ी मेहनत ज़्यादा होगी. So I was okay to do that since मेरे पास पूरा time था.
Correct.
And that's where I got in. क्योंकि मुझे सीखना भी था. I wanted to learn. And I wanted to have the access to the founder and do it full time. And there was no vision at all what I am doing today as a fund manager or running a fund like this. Absolutely not. Idea was to just, do what you love. And that was a great time, I would say, when I was doing.
I think Sanjay Mehta said it best at an event. He said that, the startup is the only place where you actually, as an investor, have an ability to influence the result.
Yes.
Right?
Yes, he's right. He's right. Absolutely right. I also consider him as one of the, mentors at the early stage where he was very, active in the ecosystem as far as the angel network was concerned. And he was very proactive and vocal about, supporting startup ecosystem and what should be the thought process as an investor. Correct. So that was another, see, before getting to startup ecosystem, the thought process was very clear. पैसे डालने हैं, पैसे बनाने.
Correct.
ठीक है? और बीच में information है. Right? And you have to know how to play the information. That's a skill set. When I got into this system and spending about 2-3 years ago, मुझे लगा कि यार ये ऐसा नहीं है. This is the place you have to give. You have to give. You have to learn. You have to give, and you have to help. Right?
So give in terms of money or more than that?
पैसे तो देना ही है आपको. पैसे तो देना ही है. पैसे के अलावा क्या देना है? So when you are sitting, if you know something, you are sharing that insights with the founders. Because see, all these early stage founders also come with a lot of things which is new to them also as far as running an organization is concerned.
That's so
idea
true.
Can be anybody's business, but then to run an organization is not easy. Second thing is, once you are the investors, what are the responsibilities you need to take care of? There's another part, right? Third is, of course, data. I mean, as simple it might look for us, between us, how to read a P&L or balance sheet or how to do a KPI, and we might ask the founders in a very simplistic way. It's not as simple for tech. I mean, if somebody asked me today that how to, do the structure, decode AI and the entire back, working, I would not be able to do it in all honesty. And the same way I would expect the founders who don't come from finance background of how to do it. So that is where, you exchange ideas. That's where you bring everybody on the same page. And that's the very and sharing happens. Mm-hmm. And connecting people. Again, it is another part. The good part
that's
is
very true. That I think you do get it, especially in the startup ecosystem. It's a lot about after investing, what can you bring to the table?
Right, absolutely.
Can you bring a network? Can you bring advice? Can you bring experience? Something has to be brought besides money.
Nowadays, so startup founders are coming with a list. So probably we have to see the list, what value add can you do.
Checklist. They're evaluating.
So table is reversed.
And how? Right? I think you did about 20-25 investments before you decided to start Rockstud.
Yeah. 24 precisely.
24.
That's the point I stopped doing personal investments.
Okay.
And I felt that after spending 4 years in the ecosystem, this is a good time to now get into full-time business. And since I stopped as 2014 prior, what I was doing, so I wanted to do something, build institution, something professional and something long lasting and have a clear of my say. So वो था कि मेरा say होना चाहिए rather than people taking their call. And that's the reason I took that time to really learn something new about this ecosystem, about investment, and then took that call of launching Rockstud Capital back in 2018 with our first fund. Which is
very unique fund, by the way. I think when you told me about the fund, I had also just got Artha Venture Fund started, and then you told me about that fund. I was like, hey, this is allowed? Like, how are you doing this? Brilliant strategy. And before you tell me about it, let me just explain what the strategy is, because you're going to make it more technical than I will, right? So, but simple strategy was that you had two parts to your fund. 50% was listed. 50% was unlisted.
Yes.
And the intent and the focus, what you were saying, was that the listed equities would be able to return at least 1x of the capital, which is, it would be 2x on the 50%, hence returning 100% back to the investors. And then all your profits would effectively be in the startups and you have your principal back. Am I saying it correctly?
You're right.
Right?
You're right. Except one part. It was 51-49 just to be precise, because in SEBI rules, as technical part would come, minimum 51% should be invested unlisted.
Side, right?
And that point of time, that was the rule, very vaguely put up. And we used that as a strategy.
But it was one of the most unique products. Nobody else was doing it.
Yeah, I mean, pretty much I would say I can take that credit of doing it first. And that also came with, again, a circle of competent people who advised me that, Abhishek, if you now go in the market asking 1 crore check to investors to write in a startup and you have not shown any exit in your personal portfolio companies, then whatever exit I got, actually I got after my fund was launched. Achha. So when I was supposed to go for the fundraising, I was not sure that what is going to happen. So after that, lot of good advice in this case, people suggested me that I should be using my experience in both the listed and unlisted, and that can convince the near families and fools to invest in the first fund. So that's where the strategy actually had to come.
The FNF round. And I actually went back and did some research. So I have the list of stocks that you have invested in, and I have some questions about just the way you ran the whole strategy. I think because it was a unique product. Unfortunately, for many family offices, it was too unique, right? Which is also a problem, right? Like you were. I think you preempted the market by a few years.
Yeah.
Today, if you launched a 50-50 product, I think the acceptance would be much higher.
Yeah, I think
you may disagree with me, but I feel that there is a lot more understanding now. You have SME, IPO, everything taking off. But you also decided that you were going to be very public about everything you did.
Yeah.
It's very rare in that occasion, right? That to be very public. I mean, let's look at some of the investments you made listed side. I'll talk about those first, right? Granules, 138 rupees a share was roughly your entry price, which is currently at 420. Info Edge went at 1500 average price, currently at 5900. Amber 950, currently at 3600. Tata Elxsi 650, currently at 7750 plus. Persistent Systems 750 rupees a share, currently at 1300, and not counting any dividends that have been paid out here. And then after that, I think you stopped issuing what price you had entered at. So you have Canara Bank, Mahindra Resorts, Aditya Birla Capital, Kaplan Point Industries, Hiranba Industries, Aditya Birla Fashion Retail, Zensa Technologies, Canfin, ICI Securities, and Dhampur Sugars. Do I have the list correct?
Yes, you are right.
But very interestingly, and I would encourage everybody to go to the Rockstud website and click, there's a media section which has the Stud Mag. And we'll come back to this whole Rockstud name policy, but it's something called Stud Mag. And every single one of these investments, you actually have your thesis behind it on the website. And I think in the startup cases, you did it right when you invested. But in listed case, you had to wait, I'm guessing, because of regulatory stuff. But about a year or two later, you published this was my thesis.
Correct, you're right.
Right? What was this requirement to be so public with your thesis?
See, I again, from the startup ecosystem, I just realized that as much as the listed equity was so open, the startup ecosystem was very opaque. I would consider even today it is the scenario. Although things are not like the same way how it used to be earlier. But when we started at the both the time, same time, it was quite opaque. You don't get any data, nobody's talking about it. And it was just done in so much, silos. I just felt that, why like that? If you really want to build trust, then the only way you can build trust is when you are actually able to showcase your work. And if you're not going to be vocal about it, then how can I convince anybody in the ecosystem, whether my investor or even those founders who are supposed to invest with me? So it is very good to ask transparency on the other side, being an investor. But if it doesn't come from your end, then I don't think so it is a fair deal.
Correct.
A fair deal has to happen from both the sides. My vision, as I told you right from day one when I came back from UK, was that I wanted to build something institution. But of course, we never had a business who could have just scaled me to that level. And I had to really go through this journey before I could have started this fund and do this part of my life where today I know that where we are.
Correct.
And somebody to notice Rockstud, unless I don't publicize the track record, which is the holy grail for us, I felt that to do my first scheme and then go through the journey of 4-5 years before a credible track record would become public, why not now?
Correct.
And that is the reason why I wanted to make sure that we are not the people who wanted to ever take a large cap or super large cap bets. Our focus was always the mid and small cap, and that's where the startup ecosystem also comes.
Correct.
And that thesis should be there. So if you look at the entire basket of stocks you named, all of them,
correct,
at that point of time when we had invested, were classic mid and small cap. Indeed, I remember Tata Elxsi was roughly trading around 3,000 crore market cap.
Correct.
And we had taken an exit when it was about 35,000 crore market cap. And that is, I'm talking from the listed equity only. I mean, let's be very clear, it is listed to listed secondary market and not like a startup thing. So ऐसा नहीं है startup में पैसे बनते, इधर ही पैसे बनते, but then हम बना सकते, that was the whole thing. And another part was I never wanted to build a VC fund. Okay, like everybody wants to do a scheme 2, scheme 3, scheme 4. My vision was never that. My idea was that I want to cater to asset classes, and my large client or the investor, who is my investor, is supposed to get all the options with me as far as investing in different assets. Right? And that is the capability Rockstud should be able to manage it. So that was the thing that I wanted to showcase my public and private investment capabilities through publicizing my work very clearly and openly without having any shyness in terms of hiding something, which I don't think so anybody should be in that aspect.
But it is also a downside to it, right? Your thesis is public.
Yeah.
And the stock can do completely what happened in 2007-8.
Correct.
What about the backlash to that? Did you ever think about what would happen there?
So you can't go, once you have hit the lowest point of life, you really can't go below that, right? That's a saying. So 2007, 8, 9, 10, it was very, very hard times. I've seen stocks going to that level. Indeed, after even we launched our fund, the first few years till COVID, things were really, really bad.
Correct.
So it is not that I actually, whatever today it seems success, when we actually built up the portfolio, we were bleeding to death.
Correct.
Indeed, this is not something which would be known that within the first year of when we launched and we invested, the markets were down. The small cap index, I remember categorically, the small cap index, Nifty small cap index was down 45% in one single year. And we were close to 50%, right? And from there, in the next 3 years, how we have recovered. I mean, indeed, from that point, we actually did 4x. That is the upside we managed out of these stocks.
And not to sell at that point, right? The panic, obviously.
We actually reshuffled our portfolio, and some of the names which you highlighted in terms of the entry and exit comes from there.
Right.
Because that was the time I realized that, you have to take the best bets available at that point of time in the market as a valuation.
I also remember that the Granule founders themselves pointed out that your report was quite comprehensive.
Yeah, you're right.
Yeah.
You're right. We got that compliment. Thanks. Because we are very thorough with our work. We believe that if you have to manage public money, you need to be very, very thorough. You have to be professional, and you have to have some commitment shown to your work where you can show the excellence.
Correct.
And excellence is just not a piece of your entry and exit. I'm pretty sure people are much better than me also available in the market who would have done a better job. But then what is your depth of that knowledge? It's something which is constant in your head, which you can use it again and again in different types. So as you said, I was never scared ki thesis pata chal ke thesis pata hona is okay. Can you replicate the success? That is the toughest part, because that is ingrained in your personality.
And I think before I get into your startup portfolio, I do want to talk about this because these are very interesting names. Like you said,
Yes.
if you go back and look at it, mostly in the 3,000 crore with a maybe a 25% qualifier plus minus.
Yes, 6,000 crore was our upper limit. That point of time when we were investing. Today, don't go with this market cap. It will be different. But yeah, that was the time.
What was the 3 things you were looking for in every business you were putting money into in the listed side? We'll come to the startup side separately.
First thing is, scale, because the scale is analyzed through the capacity of their business, right? If you are investing in, let's say, Tata Elxsi, you are looking more on the technology front at what is happening in the going forward event in terms of the automobile sector. And I don't think so. The Tesla is something which is new. That time, Tesla was quite there.
Yeah.
And, the innovation, what was happening in Taiwan, in China, it was quite public. In India, of course, we, always have that lag effect. And that's where at least investors like us can use some analogy somewhere and then plug it
conversion factor
to the most.
Yeah.
So Tata Elxsi being Tata Group, again, brand reputation is again one part which in listed equity is possible to look at. So it was coming from a good pedigree. Second thing was scalability, because in that aspect of being an IT firm, we could have seen that, they would have got the orders from US, then itself they can scale, 10x in 10 years pretty much easily. So that was another part which I just saw. And innovation was another part, added to it. So good pedigree, good innovation and scale. That is the 3 combination I always seen. If you look at Amber, they again were the manufacturers for the, as a third party manufacturer for all the brands in AC.
Okay.
Right. A policy came from the government as Make in India. And in that policy, you would get a benefit if you're manufacturing in India as a new company launch. So there was a taxation benefit. So there were 2 companies then, Amber and Dixon. Both of them were, of course, being the largest manufacturer. One was for electronics, and the other one was for AC making. And I saw the market was so big, right? I mean, 5% of the total population had ACs, right? You look at this number to anywhere else, it's just minuscule. So, the demand is not an issue. And then who's making it? So Amber was the largest supplier to all of them, right? Whoever was making whatever brand. So we just clearly saw that there's an advantage from the government. They have all the best resources with them. They can scale. There's a demand. So what else you are looking at it? You have a small company, and then that's a vision you have to go with. That ये छोटी जो है कभी ना कभी बड़ी बन जाएगी. So वो हमको करना है. So
and what drove the exits for you?
So exit was because of our strategy. Our strategy was that we wanted to return the capital within a certain period of time to our investors, so that we get our DPI, as a technical term, should cross above 1. And that is the reason I had to exit. Not all of them exited with the same rationale, but largely when I exited, the portfolio rationale was to get exits for my investors. And you
exited the complete listed portfolio as of
yes,
right?
Correct.
And then, so now let's talk about your startup investments. I have 10, right? Tell me if I missed something. Money Club, Noto, Fabheads, Nourish, InStory, Lilac Insights, Big Heart, SmartWix, Cubicle Home Automation, and Everest Fleet.
Yeah, correct. All of them are there on my website. Please check it out.
And you've also published the thesis for each one of them over there as well.
Yes.
Very, very interesting. Now, obviously, the thesis that applies in listed, especially the part where you're talking about pedigree, may not always be possible when you're looking at startups, because some of these founders literally are first-time founders, right? Some of them, like Everest, obviously, we both know there's a pedigree there. But what was the criteria there? Because it's a very wide range, right? You've got fintech, you've got fleet management, you've got deep tech, you've got high tech, and then you've also got marketing, right? If you look at some of these companies over here. So what was sort of the thesis that you were trying to go after, and what was your filters over there? Because I know very hard filters, because we've talked about this every single time, and your filters are always the same. So why don't you tell us what the filters were?
See, first thing is pedigree. So of course you are right that what you can get to see from the listed side, it might not be apple to apple comparison when you come to startups. But as I mentioned in this podcast, what you inculate or you get it in your system from the Marwadi ecosystem is that वो principle रहना चाहिए.
Correct.
The principle never changes. धंधे का principle वही है. So pedigree देखनी है. Now here in startup, the way how I saw pedigree was, of course, trying to understand more from the educational background of the person or from the companies where he has actually earlier worked. Because ultimately, if you're launching an idea, you have to have some experience from somewhere.
Correct.
It can't be just a vague idea. You just came overnight in your head, and tomorrow you made a beautiful presentation on an Excel, and you just came to think that investors are going to write money. So we never believed that. We were always focused on pre-series A. So idea was to see some kind of validation, and in that validation, we wanted to see first the founder background. From where is he coming from? What his thought process is, his experiences, his life is, and then what is the driving factor for him to do that business, whatever the business he chose to. again, the limited set of data, whatever we get, we have to make very, very hard choices in that limited set of data point. So for me, first the pedigree came as a big filter, and then comes the expertise or the, his capabilities in terms of pursuing that idea and looking at what is the validating factors, what you call is go to market or product market fit or some fancy
PMF,
terms,
Fancy
So
terms.
yeah, I'm still not a just mark. I'm not a.
What about CM1, CM2?
I'll come. That's more easy. I mean, that's again coming from a balance sheet P&L thing. But in terms of technical terms, as we VC use, so I wanted to see that part as my entry point. What I was looking at, whether the founder, whatever they are doing in terms of their idea, which they want to scale, do they have that validation at an early stage, at the early levels? And if that is so, then it is good. That is a place where we are okay to take that bet. So that's how we have done our investments. Yes, that point of time, the first fund, we were a little broad. And idea was to only look at stage. And that also comes with the first time founder, like a first time fund manager like me, who never thought I will again get into this business or eventually look at institutions. You need to go more deeper. You need to have more narrower focus in terms of sectors and all. But I wanted to have only one thing. Ki I take money from people, I manage it right way, and I return the money back. Correct. Right? And uske upar kuch agar ban gaya, to great.
Principal return has to be first.
That's a principle. I still have that today also. In every business I want to invest in or I want to do myself, I don't want to take that risk for my investors. Personal money, I can do it. I've done it. But professionally, I don't think so that somebody is okay to take that risk. I am not okay. So I want to have a strategy which helps me to rationalize that risk. And that comes through diversification. That is the reason I never went to choose a single sector and went depth, but largely kept my same hat as I was wearing in my listed equity mind, where I was having a choice. And when you're having a choice, you have to pick up a right choice. So, right, that is something I thought I can do that better than anybody.
Adapted those principles, but for the startup ecosystem, understanding that obviously there's no history, there's no 10-year balance sheet to go through. And coming from that perspective. And I think you sort of got and you sort of pushed me to now the next questions that I was going to ask. So it asked, which is, it's one thing to manage your father's money, right? It's one thing to manage your own money. Father's money is a little more complicated, but not that complicated. Father is predisposed to forgive you, right? But when you manage third-party money, right? And we've seen both sides of it. We've seen fund managers who think third-party money is for play, and some third-party fund manager or some fund managers who think third-party money is a responsibility. And what you have said is that this is a responsibility for me, that I have to return 1x, right? And then uske baad, I may not be able to give you a return. I may not be able to beat other assets classes. That's fine. But I will always return back principal, and then we'll take a discussion on the returns. Is this a mindset that you got from somewhere, or it's something that you felt when you watched, maybe when you've given money to other fund managers, that you felt that this is something that I have to always have as a primary principle?
So Anirudh, I would say this comes as probably a trait of my, upbringing, that, you should not be very casual about taking money from anybody. Coming from a professional family background, I saw that, how different businesses, how they have shaped. And looking at listed equity markets, especially where founders have taken money from the bank and then they actually, did whatever they did and all that is there publicly, it carried a very bad name to the family. So for me, it was something like that. I don't want to take a name in such a way that tomorrow, if anybody is taking my name, he should say, "Arey, usne paise duba diye."
Correct.
So I was never okay about it, despite being such asset class, which is supposed to happen, and we know. But I took that as a challenge. I thought that if you have a mindset, then only you can do it. Exit doesn't happen because you wrote that in SHA. Exit happens because you have the intent to do it.
Correct.
So ultimately, I have that intent right from day one. And that is the reason why it happened also. So I'm proud to say that we have done it.
Correct.
As a first fund, we have returned the capital to our investors. And of course, we are sitting with good profits to eventually give that also to our investors.
In terms of DPI, I think you're more than 1.5x?
Yeah, we are close to 1.4 today.
1.4.
And that is what we have already done it.
And that's in a period of 5 years, which is brilliant.
Yeah.
Any reason why this is not public? Your
So-
thesis is
So performance wise, थोड़ा हम लोग रहते हैं कि we don't want to like boast too much around. And second, ये होता है that you have to get a right platform also. I don't know. I mean, in a business like today, we both understand that everybody is chasing a certain size. And everybody is crazy about that size. So unless you're not $100 million fund in the country, probably you're not a fund manager only. So that's the impression I get from, unfortunately, in our ecosystem.
somehow the ranking systems are very different. That what is being chased and what we think should be chased.
No, pretty much. I mean, that is a whole thing. I mean, someday that would also come. But yeah, I mean, for me, I think whatever we have done so far, we are quite happy about it. And that principle is still there. So that helps. Because when you're making that investment, you're also looking the same thing to the founder.
Correct.
Whether bhai, you are going to return the money in paper or in reality, you have that intent. So we try to analyze that. It's very difficult, I would say. It's very, very difficult thing.
And sometimes things don't work out, right? I mean,
Yeah.
the world changes so quickly. I mean, if you look at something like what happened to ChatGPT, it's affected so many businesses in one shot, right? And wiped out entire margins altogether.
See, when a founder is down, that is a time actually you get to see the real founders, intents. When things are riding, everybody can ride higher and you can have different things for having that high. But when things are down, no, that is a real testimony of the founder, how he is doing. So we are okay if the company is not doing well, but we are not okay in that condition how the founder actually, thinks the other way around. And that examples are also there with our portfolio companies and also
In everyone's portfolio. Yeah.
So wo hai. But we try to always learn and minimize that part as a risk. Rest of the risk always remains. So we can't control that.
So let's talk about the star company, Everest Fleet.
We both have that. Very Siddharth. Very Siddharth.
He's coming in a future episode. By the way, also a member of the Young Founders
Yes,
Group.
yes.
Right?
That's where
Sorry,
we
Young
both
Funders
know.
Group. Yeah,
Yes,
right.
that's how we both know him.
Yeah, we both know him, and a very interesting investment, because I think when we made the investment, and I'll just talk about from what our LPs thought. A lot of conversations at IC level, at LP level, we are investing in a fleet manager. How will this ever make us money? Right? This is not a startup, right? And it was a very difficult sell, right? I think one of the few places where maybe vetoes were required, like, oh, we're going to veto this. But he's done it, right? He's definitely delivered a tech product. How was it for you? Because other companies definitely very clear on the tech side. This company says fleet in the name. So there's no way to hide what they do.
Correct. Absolutely right.
And very much a highly operational business, heavy on capex, and in a 2020 world, where suddenly there are the biggest. I remember March 21st, 22nd country goes into lockdown. March 21st, the biggest problem faced by Everest was where to park the cars. There are 600 cars to park. Where to park them, right?
True.
How did you sell that internally to A, to yourself, B, to the IC, and C, to the investors?
So as far as the idea is concerned, see, one thing really helped me with my set of learnings is that I was never biased to anything. A lot of people who had done their first fund back then were very clear with the ideology of investing only in tech startups. On the contrary, I was very clear that my thesis were never like, I will only invest in tech. So that is the reason why, naturally there was no, a filter to say that, okay, this is a fleet management company, so should I not? In my personal portfolio, there are companies which are non-tech and they have done really well for me. So I never believed that kind of thesis that only a tech would change the world. I think so what changes the world is the entrepreneur, not a technology.
Wow.
So I was very clear that I'm backing an entrepreneur, not, a tech or something. Second thing was, since we knew Siddharth right from the beginning, we knew his little bit of understanding and experience of understanding the ecosystem. So that was one thing. Third, product market fit. I think so. But that point of time, he already had 150 cars, which he demonstrated that this business can work. And we clearly could see that Ola and Uber, that point of time, both of them were quite there.
Yeah. They were struggling with the individual.
Yeah, they were not struggling in terms of demand, but they were struggling from the supply. And I very, very clearly remember that there were always some kind of episodes happening in different parts of the country as far as some sort of strikes from the driver.
Correct.
So when we were discussing with Siddharth and we just felt that, what exactly are going to change here? So he just categorically said that, listen, everybody is owning maybe around 10 cars or 15 cars each, and they are putting it to Uber system. For Uber, it's very difficult to manage so many, fleet managers as individuals. So we become the consolidated guys. Then I felt that again, you will become, one of the aggregator sort of guy, where then again, you will have that advantage. And that's where the difference came, right? He said, I will not become aggregator. I will be the owner of the asset.
Correct.
And the ownership lies with me, and the driver would be on the incentive basis, on the structure. Therefore, this is the way how I'm going to be efficient. And considering I'm going to have all 100% CNG cars, then my cost against diesel and petrol, I will be always cheaper because there is no other alternative
Very
fuel.
clear focus on this.
Right? So, and the margins were clear that you are talking about 22% onwards EBITDA margin. Right. And that was demonstrated while he was doing that business of 150 cars. So that was good enough for me. Right. And plus the intent, when, we were investing, I was also in the same doubt with, of course, every investment, you'll have some kind of doubt to be created. It is never like easy way out. And Siddharth, I asked him that, what, exit aayega na? Like, I'll get you the money. You would not have this trouble. I'll make sure that I'll get you the exit and you will make money here. Then he asked me this counter question. Ki Abhishek, what is your expectation? And back then, my idea was that at least I should succeed with more than 50% of my portfolio getting survived. And agar 5 guna bhi ban gaya, to bahut acha hai, because, markets were not that rosy then. So he said, I told him कि मैं 5 गुना बन गया तो बहुत अच्छा है सिद्धार्थ. तो Siddharth, like looking here and there, he said, डाल दो.
In his traditional style.
And ठीक है, मैंने डाल दिया.
But and let's a little bit deeper, because Everest is a very unique founder quality also, right? I think second generation founder as well, and also somebody who comes with background, right? The first 50, I think first 200 to 50 cars were pretty much bought by him on his own balance sheet. So it wasn't somebody you were talking about that, you are coming out of college and you are for the first time you are making a company. He had the knowledge,
absolutely,
and he had also a bit of entrepreneurial arrogance that was right. The right kind, right? I've seen the other kind also. I'm just saying the right kind of arrogance that he had, which was that he had that confidence.
Yeah.
The arrogance that came from a very deep level of confidence, that I can make this happen.
Yeah.
And therefore, the advice you would give to maybe Siddharth, right, was very different than advice you would probably give to anybody else. And how did you manage that, the intricacy of that chemistry? Because Siddharth is not, let's make it clear, he's not a very easy entrepreneur to deal with, because he's extremely confident. And today, if he wants, he can buy us out today himself, right? So you have to play that always in your mind. You're not dealing with a founder who does not know what he's doing.
And it's very simple. On this show, this is a learning, guys. This is for you. This is for you. Please note this. Advice मैं देता ही नहीं हूँ. I told that. So I never have to deal with
advice. I'm talking more from the angle of, obviously you're a board observer. You've been on the board of the company, and in many cases he needed us to come and step in when, for example, when COVID hit, and suddenly you have zero business and you're also owing so many loans.
Yes.
Not that he could not pay. I'm just saying that there was a very difficult moment to
Correct.
Different set of problems that he's facing than everybody else is facing. Plus a proud company, profitable. Right?
Profitable, guys. Venture capitalist in this episode talking about profits. That's true, by the way. It is possible.
5 years in a row he's been profitable, and that year also he was profitable.
Yes, he was.
And to see that go to zero at March 20, we were discussing, I think before the end of the year, we were discussing profitability for the year. And April 22, he's like, no business, right? Yes. April 1st, we are completely down to zero. And to his credit, sticking to it, figuring out some business models in there. But that intricacy is very different than, let's say, if you had the founder of some other company coming in, and I won't name anybody, but I'm just saying, how would you manage tomorrow? There are fund managers listening in too. How should they manage a relationship with a founder that comes with a second, third?
It's quite important. I think so. You have brought a very important part, that what happens if things are not going in the right way, and that is not necessarily always because of, maybe in this example we are talking about the market circumstances. There are other times, right? In that, the relationship has to be looking at considering the facts, right? What clearly was seen, that what happened was due to the market.
Correct.
Founder was not at fault, so we had our full support to him. Right, we were absolutely okay if that business could have gone to zero by then, and it was quite likely, considering the COVID period was extended for quite,
And I don't think until June there was any relief given for debt. Right, the debt was not clear what was going to happen until May or June, I think. Yeah.
No, it was quite tough period. I think so, and there was no clarity also how the things would supposed to come back. There was not a comeback plan. But there's a famous saying in the in our ecosystem that once you not hunt for unicorns, you have to look for more of cockroaches. And the cockroaches comes from the fact that survival instinct. And that's where Siddharth comes, right? Survival. I mean, he would survive in any condition. And that was how he, just helped himself to that. So for us, I mean, I would say there was little work as far as investors are concerned. We could have just provided some thought process or validate that thought process only by supporting in the same, thesis. But all the credit has to go to the founders, whether Siddharth or anybody for that matter. Because that's the truth. Ultimately, if you are the jockey on the horse, you need to know where to, win the race. From far, the investors are betting on the, the jockey. So that's what is our job is. I'm very clear what are we supposed to, do.
Now let's just talk a little bit about future, right? 1.4x DPI in Fund 1. Trust me, very, very rare. But also now you decided to pivot, which I have told you many times. I am asking you why, right? Privately, also now publicly, I'm asking you. First fund is at 1.4x DPI. Fantastic. You still have equity left in Everest and other great companies. You've already exited completely on the public side, so you have private companies left. And then now second fund are two different funds. One is a only startup focused fund called Rockstud Capital 2, right? And then you have Rockstud Capital Management Services, which is for PMS, which is only focusing towards listed stocks. Why split that?
Allocation. The problem of allocation, which everybody, when I went to the market in the first fund where the challenge was coming, that how any investor is going to pick up his bucket. I think so from investor mind, they're very clear where are they going to put their assets and allocation. And this dual structure was creating a trouble for me to do the fundraise. So I learned it very hard way that probably I still have some legs to go for in terms of achieving next fund into the same strategy, but maybe with a different set of investors. But right now, since I have to build my base, I decided to have these two things. And right at the beginning, I told you that my idea was never to be a VC investor, but more of a asset manager.
True.
So we ourselves also, call ourselves as an alternative asset manager. We don't call ourselves as a venture capitalist. That's one of the business we are into. And here there are two funds which are catering to two very clear theses in terms of catering to the investors who want to put that kind of capital with that kind of risk. So we have just differentiated that and made now this time we are, more thesis focus. So we came with our Yuva Bharat, thanks to the whatever was happening in the country with that age group. So Yuva Bharat is our theme where we are investing.
That's on the PMS side.
That's for general now.
That's general.
Yes,
okay.
That means.
What does that mean, please? Yuva Bharat.
So Yuva means whatever we are today in the room, which is full of Yuvas, which is the age group of 18 to 45. What basically it means is that we are looking at the life cycle of the young Indians largely. So all the investments we're making in India only. And idea is that whatever their touch points are in their life cycle, we would like to go after them as an investment. So suppose, a young professional might require a car to travel,
Correct.
Right? Or any other alternative mode of transport. So that is again exciting. So suppose if you're going to get down tomorrow, most likely you're going to sit on an Everest fleet,
Correct.
Which is our current portfolio company. While going on the, to office, you might feel picking up some medicines for your elders or for yourself. So you will get down and might be a pharmacy. So again, we are interested in pharmacy. So personal portfolio company comes from there is Wellness Forever, Correct. Which is one of the largest pharmacy chain in Maharashtra. There you might feel the, feeling, sometimes you see chocolates and ice cream. So that is another indulgence you want to just have. And you might pick up a company called Noto, which is again backed by us in terms of the ice cream.
Also healthy.
Right? A healthy ice cream, of course. So, and then you would go to your office, you will open your laptop and you might be using host of online, softwares or services. So we again are going to go after them. For your child, you might require education. So you might be using some online education system. We are going to go after that. You might have purchased insurance. You might be using banks. So any touch point in the life cycle, maybe purchasing a home, you require finance. So everything related to the life cycle of the person in that 18 to 45, that's what is our touch point. And all the sectors we are open to invest. So that is a broader, but still very focused only looking at from that end consumer
and also
point
stage wise, you're at pre-series A.
Yeah.
And so usually the companies and a lot of founders listening in, when should they approach you?
Now we are live.
No, I mean at what stage of their business?
So we are pre-series A. Pre-series A largely means you have done a seed and angel. You are already a 2-year-old sort of startup. You already have a product market fit. So all that, whatever we have done, the first fund.
Do they need to be at some number?
See, we think at least a reasonable number should be around 20-25 lakhs MRR. And so far our portfolio companies MRR has been far higher than these numbers. So these are the minimum entry level, which at least allows us to look at some kind of product market fit before we can
identify
take
the
a
customer, whether it's
yeah, pretty much. I mean, see, every investor is
being operating profitable or unit economics. Is that a requirement?
See, we don't look at from that angle, considering that we are very clear we are putting money on P&L, not a balance sheet. And ultimately in that P&L also, the first level is the sales. So we are not even looking at EBITDA. So, but the point is when we invest, the sales should go up. The next investor should be looking at EBITDA, where it is coming, and so henceforth. That is called the staging. So at our stage, we look at how the scalability is going to happen. And all the names, like few of the names, actually have scaled dramatically after, we had come in during those times when we invested from the first fund. And like a MRR of, let's say, 25, 30 lakhs, in a year's time, it scaled to 2 crores, 3 crores, MRR. So you have to pick up that part, that if you are able to see that, J curve itself in the early part, that's where you hit your jackpot. Otherwise, it's very, very difficult.
So Abhishek, you said two things to me, right? That I provide money, but I don't give advice. But you've also said that VC should provide something beyond the money.
Yes, correct.
So since you don't provide advice, what do you provide beyond the money?
Access to investors like Artha to raise next round. Because ultimately, how do you ask a portfolio companies to do the next round, right? You need to know people who is again going to back the certain companies at a different stage level, right? Correct. So of course, fundraising is one important aspect where whatever connect we have, we provide them. Second comes, in terms of validation. So you don't give advice in terms of क्या करना चाहिए, but जो मैंने किया है उसके अंदर में अगर कुछ changes करने हैं तो वो हम बता सकते हैं. For example, भाई आप finance देख रहे हैं, there are times where we have seen founders planning for a 30% marketing spend.
Correct.
Right, in the forecasted numbers or in the next fundraise. And we are not comfortable saying that you're going to give all that money to Google and Facebook and you are so early in your career. Why are you want to do that? Why are you not looking at alternative in terms of figuring it out that how well we can do?
Amazon and not doing anything.
Yes, so there are many ways to look at it things, and that discussion helps in terms of strategic level. So correct. There is a difference between giving an advice and having a mind-to-mind discussion on strategic level. So strategic level, considering we come from the finance background, it helps in terms of strategizing certain things. But that's about it. I mean, there's not like too much. These days we are trying to add value for the second fund. So what we are saying that we would like to ensure that those gaps which typically comes at a very later stage of a startup ecosystem, once they have done a series C and D, and then they try to do those things, we want to do those things early, right? So now we say that we are not okay with any statutory auditor on your books. So you would have done your business in whatever form and shape. But once you have taken a professional money from any fund, you should have a statutory auditor appointed along with our approval.
I really like that. And
right?
We've also made that change. And
yes.
Because I think sometimes those auditors you've taken, maybe friends, family, whatever, and then there's not real audit happening.
Yes. Yes, that's absolutely right.
Right.
And you don't want to, build a mistrust in founders in terms of not having the right invoices or not compliant to certain GSTs or income tax. So you don't want to rush that kind of risk. I mean, we have seen companies, in the recent times, which got just, wiped out overnight because of the regulator, reasons. We know the best. And that is not okay. So you have to really inculcate, as I said, right from the beginning. You don't wait for that. I will reach to Series D and then I will become profitable or I will get all the
I want to give
things.
founders a cheat code. Okay, before we go to rapid fire. My cheat code is, what are the 5 questions that founders should be prepared to get when they meet with Abhishek? Give me those 5 questions that are your standard, like, ये questions तो आप पूछोगे कैसे भी करके, in some way, form or the other. So they can be prepared. I'm not saying they will cheat it, but it's a cheat code.
No, first thing is I would like to understand why they, chose that business.
Okay.
What is the first rationale of doing that only, whatever they are doing in that particular element. Second part is what is their expertise? What is that connect in terms of whether they are the right people to do that activity, whatever they are picking up, and supporting experience or, some kind of thing has to happen. Second part is fund, key was fundraising. Then how much are you raising? What is your utilization? And show me your real Excel.
Correct.
So, bhai, tum Excel agar aa gaye, to fir we are going to really go deep on that. And we really go. We are not interested to see 3 or 5 years. We never look at actually. we look at 18 months.
18 months.
And 18 months हमको भी समझ में आना चाहिए कि तुम्हारा 18 महीना कैसे हो रहा है.
Correct.
So that kind of
So what is it,
granularity.
exit ARR or
Yeah,
exit
we go in the
MRR?
granularity in terms of utilizing that funds and how the scalability is also happening the parallelly. So that time, the founder is not generic. Has to be very specific.
Correct.
Because if you can't have a plan for next 18 months, where in your mind you are talking about 10 years of building a certain unicorn business, whatever in the air, then how are you convince anybody on the planet to invest in you? So that has to be there, and that's where आत्मा में जाके देखने वाली बात. So पता चल जाता है कि फाउंडर को नंबर भी समझ में आते हैं क्या, धंधा भी समझ में आता है क्या. See, founders, if only going to go after the tech, which a lot of people actually come
Correct.
and
They fall in love with
talk
the
about this, that, flana dikana, it's all good. I appreciate that. Without that, what are you changing? But अगर आपको नंबर समझ में नहीं आते हैं ना, तो कभी भी नहीं आएंगे. It never happens कि मुझे आज नहीं आता है, मेरे को कल आ जाएगा. It is never like that. आज नहीं आता तो कल तो पक्का ही नहीं आएगा. So this is where it is.
That's 4 questions, by the way, so far.
Fifth है, cap table में कौन है? I don't want to be the solo writer, my friends, because ultimately we are managing public money. So I also try to see कि I'm not the only person who is wearing that intelligent hat. There has to be more people. Some are advice heavy, so advice को भी लेके आते हैं और capital को भी लेके आते हैं. So that way we also see that how well the company is funded, because we don't want to see a light where आज पैसे लगाए company में और कल बंद हो गई. ठीक है? So the way how we believe in our head that at least the company should survive 3 years. Right? Now 3 years is a very long period when you have to look at from a pre-series.
Correct.
तो फिर हमारा thesis 18 महीने का होता है कि 18 महीने तक पैसे होने चाहिए. So in that case, looking at our check size, we also include कि more investors should be a part of the cap table, so that this is possible then that survive
And that
get
brings
another
me to my next question. How do you avoid FOMO then? Right? Because now let's be honest, there's a problem in the industry, right? Because everybody is trying to win a popularity contest in what is an investor's game, right? And in that FOMO is there because जो दिखता है वही बिकता है in many cases, right? In this case, when you have such level of filters, you're never going to be on the top of most number of deals in a year kind of list.
Absolutely.
But what is then your motivation? Is there a list you want to be a part of?
See, I would like to be a list of that list which highlights performance and which highlights performance in 2 parts. A, in terms of overall fund, and second, DPI. Right? I'm not quoting DPI because today that is a term which is used more regularly and asked to us in the same way how startups are asked to be profitable. It was always there, and that's what is demonstrated in actual numbers. So for me, I don't want to get into any kind of popularity context winning. And we are absolutely not want to have in finding such unicorns or decacorns or whatever names. Our principal thesis is very clear that we would like to back ideas which we are convinced about, and not the world. Right? The world would get convinced when the time would come, but first we have to get convinced, and that has to be built in the right way. Right? These are the 2 major things we have to see. Okay. Rest, everything can change. You never know what dynamics will play when. So उतनी prediction करनी क्यों है? जो कर सकते हो उतना ही करो, and उतने में you are able to do something better. Then that is what we are only. So we are very very simple thing.
Thought came to my mind. You've been a profitable startup investor without a unicorn.
Yeah, correct.
Right? That's very rare. You don't have a single unicorn today, but you've been a profitable startup investor. That it just occurred to me when you talked about the unicorn number.
No, absolutely, it's not required.
I think a biggest exit, multiple wise, has been Loginext and Everest.
Yes. Yeah, that Loginext personally and Everest, yes, through fund.
Through fund. Okay. Well, I think for now I have a lot of those questions now answered that I had at least for this interview. But now I'm going to come to the part which really gets everybody screwed. All right. So now, Abhishek, it's been a fantastic conversation, as it was supposed to be, and as I promised you it would be. But we'll come to the part of our interview or our podcast, which usually gets people into trouble, called rapid fire, right?
Rapid. I am not that rapid, boss. You can look it.
I have a set of about 10 odd questions. I will ask you the question. First thing that comes to mind, you must say it, which you already do. I'm just making it official now, right? That you'll do it that way. And so are you ready for rapid fire? Should we go?
See, I'm not going to be that rapid as you would look at this situation. But I will try my level best. Go ahead.
First question. What's the first action you undertake after waking up?
Brush my teeth.
See, how do you get to the bathroom before that?
I pick up my newspaper basically.
Acha.
That's about it.
First thing. And is that what you're reading in the morning?
Yeah.
How important is that habit? I'm obviously taking an aside here, but this is a very important habit of reading the newspaper.
See, there are a lot of stuff which you need to be updated about, and not everything is there on those, instant, dopamine, social media things. I think so. Traditionally, you should be reading something on paper, and those content might be different than what you typically absorb on the social media. So just to have that disconnect and have better concentration, I do that. So there's no other reason.
A hobby of yours that remains unknown to most people.
Traveling. If that can be counted, I think so. I'm a quite avid traveler.
But like traveling as in like traveling anywhere, or do you have a particular like
not really
beaches, something like that?
No, I think so. I pretty much traveled, throughout the world in most of the places, and that's what has been there for last 15 years or 20 years maybe. So yeah, traveling is something I enjoy thoroughly, and it is just not like touching those countries. I like to see the new stuff there, what is happening, what are the things I can learn from there in terms of either becoming a better person or better lifestyle or better investment. So something I take away, just not like, going there and enjoying. I mean, enjoyment is, we can enjoy anywhere and everywhere, but there has to be something what, they are doing something better than us, and how we can be better than them eventually in life.
Last book you read that has a profound impact on you?
None. I don't read any books, sorry.
You read newspapers but no books. Very interesting. Which Indian startup do you wish you had invested in? Missed out.
I would not consider anybody which is there in my kitty. I mean, I never actually regret. So regret is not in my books. So
or let's say one startup that was offered to you, but for whatever reason you ended up not being able to invest.
There was a company called Interview Bit. I think so. The founders were ex-Facebook, and we were, I think so, as slow as this rapid fire is concerned. And that's what is one of the biggest miss I would consider so far, because the company actually, became a $500 million within 2 years. So that would translate it about 100x kind of number within 2 years. And that would have been the biggest.
What's one app that you swear by, that you use every single day?
I think so, WhatsApp. Because without that, it's just not possible to have that communication with others. So that is I use all of stuff. Maybe 35, 40 names.
Productivity wise, what do you use as an app?
Productivity, I think I use Slack, which is again a social platform, but that is for professional purpose. So for my team and all, because there are a lot of stuff you can do on that. So Slack is what is my most go-to app.
One thing about the Indian VC ecosystem that you wish you could transform overnight?
Be more open.
If let's say you were not doing any kind of investing, like let's go back to 2007, 8 when you graduated. There was no investing, there was no VC. What would Abhishek Agarwal be doing today?
Probably anchoring. I love TV, I have always...
You are very famous on TV, by the way.
Not very famous, but yeah, I have probably done more than 400 interviews, probably covering all possible business news channels.
Where do you rank
in this country?
In those 400?
Oh, probably your top, man. This is the latest one.
What's one habit you uphold every day, irrespective of how packed your schedule is?
Sleep. No matter what, I never compromise on my sleep.
How many hours a day?
I think so, not in a day, but overall, I'm not okay to go less than 8. So pretty much the sleep is an important function. Once you're peaceful in mind, then you can do all the functions in life. So I never compromise. A lot of founders try to cut down on their sleep because they think the productivity would come, but I'm not a believer of those.
Work from home. Do you believe it or don't believe it?
Absolutely not.
Absolutely not. I think more and more people are coming into that bucket, right? That doesn't work.
No, absolutely not. I think so. See, why it worked actually. A lot of people have not realized that. It worked because everybody was put up in the same atmosphere. So when it was for everybody, the home became the office.
Correct.
That was okay. Now, in that, of course, there are a lot of new discoveries which happened. But today, if, you have to be, unless you are alone and you have to do your work at your own pace and, space, that's where work from home may be, good for you. But largely in the environment like today, there's a reason why there's office.
Correct.
And there's a home. And I don't think so that is ever going anywhere else. And look at the real estate. The office demand is all-time high. The offices are sold. You got a lovely office. There's a reason for that. And we need people in the office.
And Abhishek, I know you have 2 children,
yeah,
right? And loving, doting wife. We've hung out many times together. Work-life balance, myth or reality?
Myth, boss. Total myth. I don't think so. It exists. I think so. Everybody aims for that. And that's what you try to balance in life. And that is a good thing. But to achieve that, you require that perfect balance around yourself, which I don't think so it is very easy to, achieve.
Correct.
So it's very, very, you have to, have both the things, but ultimately that balance is the weights, and we can't have equal weights everywhere.
And last question that I'll ask you that, let's see, what or which sector do you predict will captivate most VC attention? And predict, like, I'm not talking about just a fad, but over the next decade, what trend or sector will probably make the most money over the next 10 years?
See, Anirudh, it's very difficult to pick up a sector like that because certain sectors never existed.
That's called a theme.
I think, see, India is still require a lot of money. Financial. I'm not saying because I come from that background, but pretty much any country, if they have to really expand, it is relevant, they require money. And the form of capital can change in different forms and shapes, right? Somebody can say credit cards, some would say saving bank account, somebody would put another name as buy today, sell tomorrow, or buy it today, and whatever, fancy names. I think so the money or finance sector is really going to see more, scale. We are talking about $10 trillion by 2030. That's an economic size of 3x from today.
Correct.
To achieve that, money is a function, right? So, of course, you have one. The money is already there. But that is what is going to be relevant even after 10 years. So,
hopefully, it will be a 3x number of episodes by then.
You will be. So money never is out of fashion, right? I am choosing my horse, which is never going to fail me. So, yeah, finance.
And so I had one more question that I should have asked during the main feed, but let's ask you now. Raising money for a fund, raising money for a startup, which one is difficult?
I think so. Raising for a startup is always difficult. Raising from a fund always have options. You can show a lot of things, but for a startup, that's the only business they have. So you have to really put a lot of conviction to the investors to showcase that that's the one which you are going to remain committed to. As VCs, we have choices. So that is something I would say that helps us.
I mean, if you as a VC raising...
See, it is challenge for me, but I would still consider, if I was considering myself versus a founder, I would still go with the founder considering that is difficult.
Well, thank you so much, Abhishek. It's been a fantastic conversation.
My pleasure. Absolutely.
We had thought about 45 minutes. We're almost at 90 minutes at this point.
Unreal.
But it's been really fun. And thank
all
you
the best.
So much.
How many are going to watch this?
Wonderful. Thank you so much. And I think it's very interesting. I think most people don't realize that venture capital is also an entrepreneurial journey.
Yeah.
And I think Sudhir Sethi said it best, we're venturepreneurs.
Yeah.
And it is a business. There are theses. Everybody has their own model.
Absolutely.
And we're all taking risks with our time, with our money, with our capital, and with our reputation, right? And I think in many ways for finance, what you're really selling is your reputation,
yes.
Right? And that my reputation will be ruined if I don't do what I promised to do. And so I thank you so much, Abhishek. It's been a fantastic conversation.
Thanks, Sam.
And hopefully we'll call you back in about 20, 30 episodes and we'll again talk about the next evolution, maybe Rockstud Capital 3 by that time.
Thank you so much.
Wonderful.
Thanks,
Thank you.
Thank you.